The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we got the USDA quarterly grain stocks and small grains summary reports out on Monday. We got a few numbers in there that gave us a little bit of bullish momentum, it appeared, at least in corn and wheat on the day Monday, as we closed out the month and the quarter as well. Let's talk about all this. Joining us now for conversation and market analysis, John Heimberg with Total Farm Marketing. John, good to talk with you. And, all in all, not a bad day. Beans, a different story, kind of closed well off the highs of the session. We can talk more about that in a minute. But from a corn market perspective, got through a key kind of swing point, so to speak, at that 420 on December corn. And all in all, I'd say not a bad report on Monday.
And realistically for both corn, soybeans, and even wheat, the numbers weren't anything well off of norms. We did find less corn and soybeans than anticipated, but with the rally, you kind of got to ask yourself how much of that was already kind of priced in, especially in the soybean side. Maybe that was some of the weakness that we saw. Everybody's heard the numbers. Let's just, review them. 1.76 billion bushels of corn. The market was thinking that was about 1.84, so we're looking at, basically 80 million bushels less than the market anticipated. And that only got us a few cents in terms of rise. Now, again, good fourth quarter disappearance. That's the reason we saw the miss in the numbers, as well as a very, very small, almost insignificant adjustment to last year. They lowered the crop by 1 million bushels. So, like I said, an insignificant crop change on the 23 crop. So it really came down to those export inspections, the grind for ethanol. We got another good export inspection number again today. A lot of that in the fourth quarter was pretty counter seasonal. So it was, again, just that lower prices brought demand mentality that kind of moved the grain out in that regard. Now, the question, like you said, we got above 420, which is a swing point on a lot of charts. Today was our highest close, going all the way back to the washout from the June 30th grain stocks report in that regard. So, we've kind of taken care of most of that bottom. And now we got a couple key things over top. We got a 100-day moving average at 430. We haven't traded over that since we fell apart in May. We'll see if we can get through that window. And if we do there, then maybe we just keep kind of grinding here. This is a window we typically do see a little bit of strength in the grain markets. Again, that kind of October rally mentality. But I do think we got a lot of it priced in here, and then maybe more of a 2 steps forward, 1 step back type situation. We'll have to see how the money wants to flow if we do get through that 100-day moving average. And I would assume we're probably going to go test that pretty quickly tomorrow if we're going to. So like I said, for corn today, a little bit of optimism based on the close. And again, with corn, as I said to a few clients today, you can make a story. Okay, with that number, now we're under probably $2 billion for the corn, corn carryout for next year. We're just over $2 billion. Well, you take 80 million bushels off that, it puts us probably back under $2 billion. Now, the question is, next week we get the USDA crop production numbers, WASI numbers. Continue to hear really good corn yields out there from talking to producers. I haven't found too many that were disappointed, let's put it that way. So I wouldn't be surprised that we balance this all back out, get ourselves back up over $2 billion with a very, very small yield increase maybe on that October report.
Well, and I think about this as well. And with that WASDE coming up, some of the yields out there and more, would this be a potential opportunity for farmers to do a little more in pricing if they need to? I know we've kind of talked about worry about the bushels coming off the combine, et cetera, but this again is that kind of seasonal window where we can get some strength here. So one has to wonder if this is going to be an opportune window to manage some risk as we start the month of October.
I agree with you totally there. And that's something I still have been stressing to customers is keep incremental targets into this, whether it's corn or soybeans here. Pull the trigger on a few things when you got the opportunity to. I know they're not great prices, but at least you got something, especially if you got bushels that are quickly at risk here. In other words, we need to get them moved as harvest moves along. Then you look at the call strategies, get some time on them. I know there's carry in the market. I hate really buying carry with calls, But right now, short-term calls are pretty doggone reasonable that you can get out into a March call and see if we do get a little bit of a push here, and get a little ownership in that regard. So again, for me, both corn and soybeans, this is a marketing opportunity, probably even more so for soybeans. We didn't really touch on those numbers. One of the biggest things, again, here we are about 8-9 million bushels under expectations. So not a big miss there. The most disappointing side, and actually really on both of these, 400 million bushels more corn than last year at this time frame. On the soybean side, you're looking at, same number there too, about 80 million bushels more than last year. So I think that's why we saw the soybean market just kind of roll over today. We've had a big rally. We have a good size harvest coming. And again, another number that wouldn't shock me goes a little higher on that report next week, just from what I've been hearing in general. Not a big adjustment, but 53.2 turns into 53.4, something along those lines. The market's still looking at a lot of beans. On the global scale, we got South American weather still dry, but possibly improving. There's still a lot of headwinds in that soybean market that I can't quite put that story together as bad as I can for the corn market, given where we see some of these other grains with wheat and with the demand and things that we're seeing for corn.
Soybeans too. I know we were talking about this off the air. Last week, the meal market was really, really helping out, and bean oil too has been helping. But then we kind of just, fell apart in the products, it feels like, to some degree. China bought beans again on Monday morning, but maybe that's just a confirmation of some of the rumored sales out there. And I know as well, on top of this, the dry weather picture in South America maybe could start to have more of an impact here in this market trade. I mean, the soy complex, though, to me is a curious one right now, John.
It is, and it's a head scratcher at times. And you look at the global supply, the stocks use ratio number being the highest we've ever had for soybeans globally. And again, we still have a pretty good crop, maybe not as good as it could have been, but a good crop coming in. It's been good to see the demand, but again, these continue to be those routine 116,000 ton sales. I mean, we need to see some big numbers. And that one got put together last week. Sometimes it takes a couple days for that to hit the marketplace in terms of the overnight news. As you stated, last week was soybean meal on Friday. Some of that was ramifications from the hurricane coming through. You got to think about the southeastern United States where the hurricane came in. You got North Carolina, one of the largest hog producing areas in the world, as well as poultry in that southern region. There's a lot of demand for soybean meal. And I think end users got a little bit scared. They bought into the market aggressively on soybean meal. I mean, we haven't had a move of that strength in soybean meal going back to June of 2023. So it was a pretty big move for that price. And obviously that fueled up the whole bean market when we see a 6% jump in meal. Add into that October, first notice day is today for the October contracts for meal and oil. So that may have brought a little bit of a short squeeze in and technical buying all in that exact same window. And obviously that gave beans that leg up that we saw on Friday. So with that, again, I think there's good value in the bean markets. I think this is an area, if you haven't been selling beans, here comes a $10 cash sale in most regions, sitting in front of you for beans you got to move this fall. Look to take advantage of it here and continue to target higher if you think it's going higher. Excuse me, but get those sales moving at this time frame, especially if you got those, what I call at-risk bushels that got to get moved without storage or without any plan on them going into the bulk of the harvest season here in the next few weeks.
Wheat too, real quick. Anything on the wheat numbers that came out Monday surprise you at all? I know all wheat production was technically higher. Ending stocks were a little bit higher than pre-report estimates, but still found some good support on the board. But anything stand out to you, negative or positive, on the wheat side, John?
The wheat side, I think, is still a bigger global story than anything right now. We're still keeping a very close eye on what's going on in the Black Sea region. We saw the European wheat crop get its estimates cut over the weekend again, Friday into the weekend. So there are some global things brewing. Still, the biggest problem for U.S. wheat is global prices. Russia continues to undercut the market. Now, Russian wheat prices did go higher last week, but they keep the prices undercutting, so they're getting financing for the Ukraine war, and they keep a lid on anything we have. When you go look at U.S. prices versus those global prices, we're way out of the marketplace. We have seen at least a little bit of an increase in demand, but we saw export sales really fall apart last week for wheat, market year low. And you got to ask yourself, with some of these grains, corn, beans, wheat, with this rally, are we getting too expensive? And we see high prices cure high prices, as well as low prices fire up demand. High prices can limit it, and maybe that's an window we are, just given the global supply picture, that we may have to be a little bit cautious about how far this thing really wants to run.
John Heinberg with Total Farm Marketing is our guest analyst here today on Market Talk. John, let's look over the livestock trade. Pretty quiet in cattle and hogs on Monday. Not a lot in the way of fresh news, it felt like there. Cattle trade, though, you and I were talking a little bit, and you sound still a little maybe concerned about this cattle market overall. Talk about that a little bit, John.
Yeah, you just look at the price action over the last week. Are we getting tired here? Now we got stronger cash trade. That's great to see, but we really didn't get much of a reaction out of that. We're pretty fairly priced according to cash, 184, 185, all in this window. Feels like this is just a big barrier. We lost $3.50 on choice carcasses last week. Steady today or a little bit firmer. So it's kind of curious if that trend continues. Is that enough to bring those packer bids down? We'll have to see. So we're kind of in a window where I keep calling myself cautiously bearish, the cattle market here. Just again, telling producers, if you got front end cattle, December cattle, late October cattle, that you haven't priced out yet, puts are pretty doggone cheap to make sure there's a floor underneath this thing. Keeps going up. You've got the cattle in place if the cash market works for you. If it doesn't, and we do roll over, last year we rolled over in September, maybe we roll over in October again. We've got a pretty good rally here. I mean, realistically, October cattle up $11 or December cattle up $11 from the last low. This is the point where this market wants to take a little premium out. And I think if retail values continue to stay soft, that gets easier and easier for me in the market to do. So, like I said, the area we're at, this 183, 84, 85, October, February, December, February, respectively, seems to be just kind of a spot that this market, either when it gets through, it's going to probably go. If it doesn't get through, we could easily correct back. So again, like I said, cautiously bearish, and take advantage of the $10 that we got in front of you here. Make sure some floor is in underneath those cattle, and if the cash market wants to climb, good for you.
What about that hog trade? That's kind of been range bound. October hogs up around that 82.25 level right now. You look at that compared to the cash index at 84. I mean, pretty close there. Any big things stand out to you in the hog trade right now, John?
Yeah, I think we're getting ourselves pretty range bound here. We're watching the cash index, still trading a couple bucks over October. Expiration, obviously, about 15 days away, on the 14th of October or so here. So that still can keep a little support in that front end. I keep looking at that gap, December to October. There's a pretty good gap there, about $9 again today. Do we get that December to move up into that window? Now, the only thing that's disappointing, cash index has been down 8 consecutive weeks now. Not big moves, but it's just been slowly, slipping away. So I think that's some of the reason we just can't really get anywhere. We want to go a little bit higher, but we've gotten sideways. Now, last week, going into Tuesday's commitment of traders, funds are a big buyer of hogs, but then they've kind of, like I said, flattened out here over the last handful of days. Just feels like maybe we got enough into it at this time frame until maybe we get that October contract off. Then we'll see where this market wants to go. And we got quarterly hogs and pigs last week. Numbers weren't anything. It was like the cattle and feed report, pretty much right in line with the market thought. The thing that's still just staggering to me is just the pigs per litter. That's up over 11 and a half pigs per litter. That's just massive numbers, and again shows the efficiency and the quality of the U.S. producer in terms of those farrowing operations. When those pigs per litter stay big, that just still keeps 1 or 2 extra head in there, and that just keeps those hog numbers a little bit higher. So right now I'm kind of in wait and see mode. I could see the market wanting to kick in one more time if we get some friendly news. But at the same time here, we've been sitting here for a while. Maybe we just kind of keep grinding until we get to a point where the market just gets tired of trying to go higher and chooses the other path of least resistance, which could be taking some money off the table.
John, how about the dairy trade real quick? Any notes there for us as we wrap up the month of September?
That dairy market had a heck of a run. Looks tired on the charts right now. Now, we did get a nice little bump in the cheese, at least today, in terms of the block price. Barrels now back, even with blocks. Big drop in barrel prices. I'm getting some mixed signals in here. Maybe we get ourselves a little bit range bound. Again, I think the top is in the short term unless, the demand side kicks up. We're reading commentary from, USDA product pricing numbers and their commentary that cheese demand is now kind of plateaued or flattened out or even slowed down here, as maybe we've gotten through kind of this fall crush of schools, pizza, football, all that fun stuff at one time coming into play. And this market settling down as we've seen butter prices come down, cheese prices stabilize, milk prices are still relatively high. I still think for the dairy producer, there's some great opportunity here. Make sure you got some floor in. But again, we'll have to just kind of watch how things go in those products. But maybe now $23.50 on the floor, 24 on the top. Maybe we get ourselves a little sideways here. But like I said, you do have a chart that looks like it's put a topping action in here about a week and a half ago.
All right, John. Good stuff as always as we wrap it up here. Anything final you want to share or reiterate with folks today?
Again, I know it's busy time and you're going to be in the combine. You're going to be pushing, trying to get stuff done. Obviously, pretty good weather to get things done right now. Just stay on top of the marketing side. Feel free to give people like me a call to say what's going on. I had a couple guys say I had no clue what the market even did with the report. They're very surprised to see corn was up to 4 1/4. They wanted to make a few sales there. So just stay active in things and, keep your focus and stay safe. But at the same time, don't forget about, what's going on with the markets because things can move pretty quickly here. And this little bit of value that we have can either grow fast or fall apart fast.
John, if folks have questions, want to talk to you about some of their marketing strategies and more, I know they can reach you there at Total Farm Marketing. How can they get in touch?
Give me a call, 1-800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
John Heinberg with Total Farm Marketing. Thanks as always for joining us here this week. Appreciate it. We'll talk to you next week.
Sounds great. Have a good week.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.